There's one big thing that 95% of traders ignore, and if you're guilty of this, you're literally throwing money away. It doesn't matter what your trading style is, this affects everyone. But don't worry, you can make a 2-minute change to your daily routine that will make you thousands of dollars more each month from your trading. And this big leak in your trading profits comes from economic data. If you're not taking note of it, it's probably causing havoc in your trading, killing your profits, causing avoidable losses, and bringing you a lot of confusion and frustration. Now, the chances are you only focus on charts when you're trading, which is fine, but understanding how to read data helps you avoid losses very, very easily. So quickly, what is economic data? It's the news that's at the core of every move the market makes. GDP, economic growth, interest rates, the cost of borrowing, CPI, inflation, employment rates, and non-farm payroll. Currency markets are driven by this data, and collectively, this data decides whether the markets go up, down, or sideways. So it's a really important factor and should not go ignored. When data is released, it causes what I call a speculative run. And this is where the danger really lies. Large institutional and professional traders have access to super fast data feeds, which give them access to the data fractions of a second after release. Like the Bloomberg terminal, which costs a whopping $27,000 per year per user. With instant access to data immediately upon release, these traders can speculate as to whether they think the news is going to send the market up or down. And the large amount of money injected into the market by big money traders at the exact same second causes the market to fire off in one direction at rapid speeds, sometimes covering up to 100 pips in a single minute. Now you can see why this is dangerous. Imagine you're happily sitting in a trade on the buy side, unaware of any data due to be released. And then suddenly, within a matter of seconds, your trade sinks, you lose your entire day's profit, and are thrown into a huge loss all in the span of a single minute. Just like that, your week has been turned upside down. And the worst part, you probably won't even be able to get out of the trade at your stop loss level, meaning your loss could be 2 or 3 times bigger than planned. This is because of slippage. Think of it like this: the market is one big auction. For you to sell at a certain price, there has to be someone on the other side willing and ready to buy at that price level. And if there isn't, you won't be able to transact. If you're trying to sell a car for $50,000, but there's only one person who's willing to buy, and they're only going to pay $40,000, then you cannot transact. You cannot sell that car until you meet their price. This is how the market works, but it's all automated through brokers. In this scenario, if your stop loss is placed here, and the news sends price to here, you won't be stopped out until the market reaches a price that someone is trying to buy at, which could be here. So not only does data obliterate trades, but it also leads to much bigger losses than expected. This hurts in the short term because you lose more money than expected, but it also hurts in the long term because it breaks your risk management plan. And breaking your rules breaks your strategy. If you're not trading your strategy, you have no idea whether this is a profitable way to trade long term. Okay, so now you know what data is and why it's dangerous, but what can we do about it? How can you avoid getting killed by data? Well, fortunately, that's actually really easy. It just requires one small 2-minute change to your daily trading routine. And that is reading an economic data calendar at the start of each day. By doing this, you see what data you need to be aware of, and therefore you know what to avoid. Now, what calendar do I recommend you use? Well, there's actually a couple that I like. I like Forex Factory, as it has a lot of articles and data that you can use for fundamental analysis. However, when it comes to just reading data, sometimes Forex Factory is missing important data points, which can lead to dangerous situations and big losses. So for data reading alone, I think a calendar like FX Street is more beneficial. It covers all the major data and won't miss anything, so you might opt to use that one. I'd avoid getting caught up in the analysis on their site though. I find a lot of it to be surface level, and I don't think it's going to help you with your trading. Now, there's a few extra little details that you need to be aware of. There are 3 tiers of data: low, medium, and high impact. For the most part, you only need to care about the high impact news. The others won't have a dangerous effect on your trades 99% of the time. And if you aim to avoid every single piece of data, you will literally never take a trade. So, red folders, that's what we need to be aware of. And now all you need to do is check your calendar for 2 minutes a day before you start trading. It's also wise to actually check at the start of the week as well, so that if you're looking for any swing trades, you know the days that trade is going to get dangerous. And it really is that simple. Just don't get into any trades until you've checked your calendars. By doing this simple task, you'll save yourself a lot of headaches and a lot of money. Start taking note of data, and this small change will do you very, very well. If you want more lessons like this, subscribe to the channel, it's totally free, and check out the description. There's almost always a free course of some form in there. So check that out. Thank you for watching. While you're here, why not check out one of these videos? More learning for you, and it's all totally free.